Wild late-day rally. Should investors feel good about getting back into the market, or was this just an aberration?
Well, let's ask our Bulls and Bears panel, and I know one guy who's been in the market since Friday, Scott.
Yeah, we've been buying what was beaten down last year. Now, I'm not making retailers, small caps, internet stocks, not the big names that everybody loved late last year, mortgage stocks and some financial stocks. This doesn't mean you go in all in. All of this volatility is not going to end so fast. There's still headline risk. But I do think that we've put in a really good bottom today. It's very important, this kind of big, huge volume intraday reversal from a technical perspective. I just don't think you can go all in, but I do think you can put more than your foot in the water. Put your bottom half in the water now for the next 6 months. And we'll see where the economy stands after that.
Up to the bikini
waist.
bottoms?
Your waist.
Right? Wearing the Speedo?
I've been in up over my head. I mean, I've been in the market the entire time. I don't think individual investors should try to time the market. I think if you buy...
Why not?
Because history shows that you just can't do that. Pros can't do that. I don't think individuals can. I think you have to take a long-term perspective when you buy stocks. And I think if you could train yourself to use these sell-offs as opportunities to buy. And we don't know, where the ultimate bottom is. I bought earlier on a lot of these stocks, and but I'm confident that they're going to come back. We've seen this before. That's the approach that I think really, over time, turns modest investment into big sums of money.
Peter Schiff, go ahead.
Well, I doubt that this is a nominal bottom, but even if it is, even if we don't make a nominal new low, U.S. stocks are going to keep losing value relative to stocks around the world, relative to other currencies, relative to gold, relative to commodities. I've been out of the U.S. market for a long time, and because I've avoided U.S. stocks, I have a lot more money. My clients have a lot more money because we've understood the real problems for the U.S. economy and for the dollar, and we know we're in a bear market. It's a bear market like the 1970s.
Pat, what are you buying? What do you like? What has been a good bet for you?
This is a wonderful opportunity right now to clean up your portfolio. If you've made mistakes, if you've overextended yourself in a single stock, it's an opportunity. I think Scott's right. I think we're going to have a period in here where we're going to have a real opportunity to clean up those mistakes. If you've got 20% in a single stock, get yourself down to what is rational. Peter's right, too. You have an opportunity maybe to have some international in your portfolio, but not everything, because, Peter, the international markets are absolutely correlated to the U.S. markets, particularly in down markets, not necessarily in up markets, but in down markets. The international markets are highly correlated to the U.S. markets.
We saw Asia
absolutely,
fall,
and you know what? That's predictable. That is predictable, because every other time we've had the downfall in the U.S. market, the world markets come right behind them, and you can go back to any period and look at this. So anybody who studies markets knows that the overseas markets are not independent.
Scott, you don't have to hold on. You don't have to be Peter Schiff to be somewhat bearish here. Our friend Toby Smith said you should go into cash, wait until the summer when the real bargains come in. Well, is that what the folks should do?
Toby and I are like yin and yang. When I get bullish, he gets bearish, and vice versa. But let me just say one thing about the dollar and gold. The Fed just cut rates in a surprise move, and the dollar didn't make a new low in the dollar-weighted average. And gold didn't make a new high. Something is happening here. The dollar is finding support.
No, the dollar made a new low against the yen.
Against the yen, but the dollar-weighted average did not make a new low. You can compare it and contrast it and talk about a carry trade, but my dollar-weighted index did not make a new low, and that's very important.
Look, I wouldn't read anything into that. The dollar is going to make many, many new lows.
But it's irrelevant. It's irrelevant. Look, the markets that fell the most were the markets in Asia, the markets in Europe. We fell the least. The United States market is far more undervalued than other markets. If you want to buy into these high PE markets like China and all these other places, go right ahead, but you're going to end up losing more money.
Remember,
by the way, gold is up today
$1.20
an ounce. It is now trading at $891.